Hey everyone, today we're going to discuss about the bond and the bond market. So, a bond is a debt financing instrument. It is a form of long-term investment issued by a corporation or government where the purchaser becomes a creditor of the company. So, in this instance, the bond issuer acts as the borrower and those who purchase the bond would be the lender of the bond issuer. For example, it's like this. The government would want to finance projects for the country. So they would be issuing bonds for corporations or individuals so that they would have money to fund for these projects. Those corporations or individuals becomes the creditor. They give money to the government to fund those projects, and in return, the government would pay back those corporations or individuals. There are different kinds of bonds. We have the government bonds, corporate bonds, municipal bonds, and mortgage bonds. Now, for the government bonds, national government issue these bonds and entice buyers by providing the face value of the agreed maturity date with periodic interest payments. This characteristic is attractive for conservative investors. So you can think of the bond as an investment as well, similar with the stocks. Next is the corporate bonds. So these are bonds issued by businesses to help them pay expenses. The third one is the municipal bonds. Local governments, their agencies, and other government-owned entities issues these bonds to fund for their project. The difference between the government and the municipal bonds is that the municipal bonds is more on the local government, while the government bonds is more on the national government. And lastly, mortgage bonds. Pooled mortgage bonds on real estate properties provide these bonds. Mortgage bonds are locked in by a pledge of particular asset. So similar with the stock market, we also have what we call the bond market. Now, the bond market is a financial market in which the participants are provided with the issuance and trading of debt securities. Now, the goal of the bond market is to provide long-term financial aid and funding for public and private properties and expenditures. Now, a coupon is a periodic interest payment that the bondholder receives from the bond's issued date until it matures. It is usually paid semi-annually. The coupon rate is the yield of the bond paid. The market price of the bond is the price at which the bond is being sold. The par value or face value is the amount printed on the face of the bond which the borrower promised to pay the bondholder on due date. So the face value of the bond is sometimes differ with the market price of the bond. So the market price is how much the bond is being sold, and the face value indicates how much will be returned to the bondholder after its maturity date. Now, if the price of the bond is equal to the face value, the bond is purchased at par. Since they're just the same, whatever is being purchased will also be returned on the same price. So it's purchased at par. Now, if the price of the bond is less than the face value, the bond is purchased at a discount. While the price of the bond is greater than the face value, the bond is purchased at premium. Now, on computing for the coupon amount, we use a formula. Coupon amount is equal to F times R over K. So F times R over K. F is the face value, R is the rate, and K is the period. Let's have an example regarding this. What is the semi-annual coupon for a bond with a face value of 500,000 pesos that pays 5% payable semi-annually for its coupon? So we can use the formula F times R all over K. So that is our coupon amount. Now, take note that the face value is 500,000. So this is 500,000 times the rate is 5%. So that would be 0.05. And it is payable semi-annually. So K is 2. Therefore, if you compute for this, the value would be 12,500. So this means that the payment would be 12,500 for the semi-annual coupon. So that's everything for the bond and the bond market. In our next video, we're going to discuss about the consumer and business loans. So I hope you guys learned a lot today. Thank you guys for watching and see you guys on the next video.